Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call, live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Nigel and Sonia. Guys, hi. Good morning. Middle of the week, and things are looking a little better. In terms of global cues, most certainly things are looking a little better. Just quickly running into what the big cues are, I think today's session is particularly important after yesterday's surprising fall. Yesterday was a bit of a puzzling fall. The market fell with ferocity, with momentum, when no other markets around the world were falling, right? So a lot of people are still asking the question, what really happened? We'll get into data, etc. in a bit. But in any case, since the price action was what it was yesterday, today's action, price action becomes important. Will we see follow through, or will we see the markets starting to come up a little bit? So it'll be an important signaling effect. Global cues from overnight are broadly supportive. They're not, wildly bullish, but equities are up about 1%. You look at the S&P, the Nasdaq. Yields went up about 9 basis points, but I think the bigger cue is dollar. The dollar index is around 103, a little over 103. It went up about 0.25%, but this is small, nothing very large. There was that sort of Fed Chair Powell speech, but there was nothing from it. No new insight in terms of the trajectory for monetary policy, or him commenting about the recent economic data, etc. The weakness in economic data. It was about central bank independence and political sort of interference, non-interference, and that kind of thing. So no real implication from a market perspective, really. So we are kind of left to our own devices in light of sort of absence of big global market moving cues. The Nifty, to begin with, has the 20-day moving average as the first big resistance, which is at 18,159. This becomes some distance away, but not very far away as well, about little over 150 odd points away from where we are. The big number, which is the swing low, the weekly swing low of 17,774. This was made on the 26th of December. That also is in sharp view. That kind of becomes the kind of sacred line which must hold. So 17,774. I think that's a number which I think you must keep at the back of your mind in case there is some selling which starts to emerge. On the upside, this is a 20-day moving average. On the Bank Nifty, I think the structure is a little more weakish as compared to the Nifty. The Nifty did not break last Friday's low. The Bank Nifty did. The Bank Nifty broke the low of 41,877, which is the Friday's low. It closed below Friday's close as well. And that's why I'm saying maybe it's a little more trickier here on the Nifty Bank. Near term, the low of 41,569, which is the 26th of December low for the Bank Nifty, that remains the level to watch, the crucial level to watch. And on the way up, there is the swing high of 42,717, which is nothing but yesterday's high, because the market did a bit of a swing kind of a trade yesterday, went up and then kind of cooled off. And then above that, you've got the 20-day moving average at 42,889, which comes into play. So those are broad levels to watch, both on the Nifty and the Bank Nifty. Not very much in terms of big cues from the global arena. Maybe as we proceed through the course of the session, we will get some, but so far, not very much. It's a tentative start, which the SGX is indicating about a 24-odd point gap up, 18,010. Sonia, hi. Nigel, hi.
Hi, Prashant. Morning. Nigel, morning. Yesterday was a very disappointing day, right, for the bulls. So it's important to see that with today's positive moves, does the market use it as a selling opportunity? Because that's been the case. The texture of this market has become weak. So although you might see a positive up move today, it's better to just be a bit cautious after what we've seen in the past few days. Now, yes, the global handover is very strong. The Dow went in the green. The Nasdaq has been up for 3 straight days now. Even Asian markets are well in the green. But on the index, on the Nifty yesterday, there were fresh short positions taken, both on the Nifty and the Bank Nifty. We barely managed to close above that 100-day moving average of 17,900. So it would be interesting to see if that gets tested once again. Now, if this 100-day moving average breaks, then the December 26th low of 17,774 becomes a crucial support level on the index. And they do say that if levels on the lower side get tested more than twice or thrice, then that eventually gets broken. So just keep an eye out on that. There was large selling once again. FIs have been selling now for 13 days. Large selling of 2,100 crores yesterday. In terms of individual stocks, some names like Tata Motors saw a little bit of short covering, but I'll also be watching out for the IT names because tomorrow you have both HCL Tech and Infosys reporting their numbers. And after TCS is showing, there perhaps could be some trepidation over there as well. And then you have big numbers, HDFC Bank, Asian Paints, ICICI Bank. But for the market, the sense I'm getting is the muted opening is what you can expect. The SGX Nifty is indicating a muted start, but the texture of this market has become weak. There's no two ways about that. So will this be used as a selling opportunity? It's been all over the place, really volatile. So what are the cues that you're picking up?
Well, a couple of observations with regard to yesterday's trading session. Normally, we see the Nifty ending down by 180, 200 points odd when the net institutional number is rather large. That's around 1,500 crores or around 2,000 crores odd. Just take a look at that. Yesterday was a little bit odd because the institutions, well, they net sold close to 300 crores. And yet we were down close to around 200 points odd. So was there, other large participants, the HNIs or retail-led sell? It looks like, at least as of yesterday, that the selling or the downtick on the Nifty wasn't led by institutions. That is what it appears like. Now, the Nifty Bank, that's the sore thumb in them. In the last few sessions, it's underperformed. Yesterday as well, it kept up its underperformance. Is it done with that? We need that to bounce to see a bit of an up move. The FI data, well, it's bearish. On the index futures, well, they added close to around 27,000 short contracts. And that's, close to around 35% higher on that low base. So massive short positioning out there. And on the index option side, well, they wrote calls very, very aggressively. So they have very bearish news coming from the FIs. I'll tell you what, that's not such a bad thing. If you can get any kind of good news, given that we're at the lower end of the band, we could see a bit of a bounce. Now, what were they writing? 18,000 call, 18,100 call, as well as the 17,900 call. And they're writing it very, very aggressively. Going by the aggression that we've seen on the call writing side, well, the PCR has come back down to the lower end of the band. That's around 0.7. Remember, the last many, many months, when we go to 0.65, 0.7 odd, normally you get a bit of a bounce. Let's see whether or not that plays out yet again. Support level, that's fixed. The recent lows, you get it at around 17,800 odd. Resistance comes in at around 18,050. Going by the call writing we are seeing at around that 18,000 call odd. You want to trade above that 100 DMA and then make a bit of a dash. SGX Nifty is suggesting a start in the green. My guess is that at some point of time, we move into the red, you get a bit of an intraday dip. And risk reward could favor a buy. Why is that? Because we're at the lower end of the band and the PCR has come down to around 0.7. Provided that 17,800 is held out, I think maybe we could, again see a bit of a relief rally.
All right, Nigel, thanks for that. As we've been saying, yesterday was a bit of a puzzling fall. I really thought that the day before yesterday's price action, after last Friday's big sell-off, we will have a little bit of continuation yesterday, but it was a complete dump. So in that sense, today becomes important to just gauge what's the market and the screen itself kind of telling you. Before we go any further, let me quickly sort of tell you what's lined up here in the first half hour of the show. We will get you updates from markets across the globe. Steve Englander of Standard Chartered Bank will join us to discuss global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At around 8:30 a.m., we will have a fundamental stock analysis with Devin Choksi of KR Choksi. We'll talk stocks which are moving